Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management. Well, I suspect that everyone in this review today is on tenterhooks. Any number of stocks in the NASDAQ in particular have been crushed, some very severely. But is that all for the downside? Or is there more to come, given the potential for some monetary tightening and interest rate hikes by the Fed? Given the decline in every single one of the FANGs, including a modest decline in Apple shares, the only stock that SVA may not have offered a clear sell on, what should we do now? Well, let's take a look and see if any patterns are emerging. However, before we take a close look at the FANGs, as always, I do like to say thanks to everyone who likes this video and all our subscribers. Okay, let's start off with the stocks that are in clear downtrends that have not met downside targets, and the first one is Amazon. And I find Amazon a very interesting case. The first is that every time that Amazon has reached a major breakpoint, and let's start off with the HB4 peak. Okay, now the stock dropped, but look what happened. It sort of slid into its HB3. It didn't really plummet there. It really slid into it. And then, secondly, when it broke support at the HB3, which is 16 times book value, it sort of slid into its HB2, which is 12 times its book value, before breaking below here. Now, what's going to happen from here on in to the HB1, which is 10 times book? I don't know. But so far, the stock has not really kind of what I would call let go in terms of price. It hasn't gone anywhere in the past year. Indeed, since June, July of 2020, you have been very hard-pressed to make any money in Amazon whatsoever. And now we have broken below the HB2 10 times book, which is a 10-year valuation low. And it's going to be interesting to see what happens, particularly when they report. We have already seen that the expectation for earnings and therefore the fair market value is now in decline, the first time that this has happened in a long time, as we hit a new low. I am watching this stock with very, very considerable interest, believe me. The second stock that is still in a clear, unsatisfied downtrend, if you like, is Alphabet. As you know, one of my favorite stocks, but hasn't stopped me from selling it anyway, and I'm still waiting for its mid-super growth price. That's 5.5 times book value before I would take any action. Now, the stocks that have been in a clear downtrend and have hit support. Well, the first one is Microsoft. And we had a beautiful sell on the stock right at its HB3. The stock has now declined to its HB2, which is 12 times its book value. It's kind of uncertain, as you can see here, although it only dipped below the HB2 momentarily and is now safely on side. It's going to be interesting to see the new balance sheet, particularly with its new acquisition. So I await that with considerable interest. But if we want a stock that we might invest in now, Microsoft might be it. NVIDIA, same story, nice decline, a breakdown here, and then a pullback, and now a decline to the HB4. However, NVIDIA is, unlike Microsoft, is having a hard time hanging on to its HB4 price. That's 20 times book value, and as of today, it's a little bit below there. So we don't have the same degree of comfort that we do perhaps with a Microsoft. So far, I'm not going to do anything about it. Facebook, same story. Again, look at what's been going on at its mid-super growth price, 5.5 times book value, sort of back and forth across, and today it's a little bit under there. And again, look at the trend of the fair market value. I'm not sure that this stock has found its footing as of yet, and I would do nothing about Facebook myself except stay away. Netflix, again, tremendous downtrend. It has dropped, well, gosh, it's dropped from over $600 to under $400 in very, very short period of time. It's been trying to find its footing at the HB1, which is 10 times book value, but it has not succeeded so far, and today it's under that level. I would not do anything about this stock. Following this big decline here, I wouldn't be surprised at all if we saw this stock down at its bubble price. However, let's wait and see. Apple, well, Apple's the one stock that I did not knock out of the portfolio, and the reason for that is that when I was looking at this stock, I was actually looking at an HB6 price adjusted for share buybacks. And we're going to see what happens. We have just got the Apple results. They're very nice, thank you very much. And I noticed with a quick look at the balance sheet that indeed the equity has fallen. I am going to be very, very interested to see what has happened. For the moment, however, I am going to assume that the stock has remained on side of its HB6, and we will keep that in the FANG portfolio. As I say, nice numbers. Let's hope that that remains the case. And finally, Tesla. Well, Tesla fell almost perfectly to its HB5 price, which is 26 times its book value. Today it is hanging on very nicely. And if you would like to potentially buy that stock for the FANG portfolio, perhaps you might. The only thing that concerns me, and concerns me considerably, about Tesla is the fact that its fair market value remains 80% below the current price. And as we have seen very recently, when some of these stocks have fallen out of favor, they not only fall, they fall deeply out of favor. So I'm a little concerned. If you do buy, remember that the HB5 must hold. Well, in summary, what can I say? Well, actually, never mind what I say. What does SVA say right now? 2 of the FANGs are still in downtrends, and 5, and perhaps 6, if I throw in Apple, have fallen to support. Although, save for Tesla, thus far, that support is not exactly what I would call neat and tidy, as you saw. On top of that, neither the NASDAQ 100 nor the Standard & Poor's 500 have fallen all the way to levels where I would look for strong support. The NASDAQ missed its bubble price, that's 7.4 times book value, by 4%, and the Standard & Poor's 500 missed its super growth price, that's 3.5 times book value, by 2%. So I have to say this. In the past 35 years that I've been working with SVA, if we are now looking at a rebounding market low before the indices reach technical support, this would be the first time ever that such a turn has occurred in all that time. Now, as of last week, there was only one stock left in the Phantom FANG portfolio, that was Apple. But as of today, Nvidia, Microsoft, Meta, Tesla, and Netflix have all traded down to key breakpoints. So perhaps we should simply throw in the towel and buy them back anyway. Well, Microsoft and Tesla are trading above their key breakpoints, and I might consider them for inclusion. But Nvidia, Meta, and Netflix are just a touch below their own. And before I would act, I would like to see evidence of a confirmed breakback over the line, as it were, before I would be comfortable here. As I noted last week, and as you have observed over the past almost 3 years that we have offered the FANG Friday, patience is often rewarded. Although you need to be ready to take advantage of opportunities when they occur, as they tend not to last very long. When the NASDAQ 100 reaches its immediate downside target, its bubble price, we will have a solid buying opportunity in those FANGs, as has usually happened in the past. Personally, I am not comfortable trying to second-guess SVA and take action, perhaps prematurely. But, believe it or not, I have been wrong before, and there is always a first time. As a final thought, now that you have seen, perhaps all too vividly and even personally, how poorly stocks can perform in weak markets when they have no decent earnings and fair market value support, if you'd like to see where your own stocks are sitting in order to assess the riskiness in your portfolio, email us at info@strategicanalysis.ca, and let's see if SVA can keep you out of trouble and make you money as well. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you all next week.